All right, everybody. Living well with Rentwell. Rob Coldwell here. I'm here with my buddy, Sergio Altomare, and he has an awesome company named Hearthfire Holdings. And what I love about Sergio, we met maybe, I don't know, half a decade ago or so, and we were very much in the same space. We were like redeveloping some small multifamily, and Sergio is really getting into the self-storage. And I think you're really going to love and appreciate his story because you get to see how somebody who starts to apply like the spiritual principles of life, like that prayer and meditation and slowing down to speed up in a way, he's really found his track right now. And he's really, I can just tell from catching up with you for the last like 20 minutes, my friend, like it seems like you're like, dude, this is it. Like here's where I'm at right now. And what I'd love for you to do is just, this podcast is 4 parts. It's who are you? Reader's Digest version. What was your first deal? Then what kind of deals are you doing right now? And then we go into like find those pearls in that growth and that learning. And then the last part is how do you stay healthy? How do you stay fit? How do you stay centered? All that. So take it away, my friend. Who are you? What's the Reader's Digest? And what was that first real estate deal like?
So first, thanks for having me, Rob. Awesome to reconnect with you. I feel like we don't do it enough. But then again, I see you more than I do a lot of people that I'm connected. So I always appreciate it. My journey is one of those crazy game boards that has all of those cards that have you change and tweak and change your path. That's the way that I would describe it now. I'm born and raised in Philly, in South Philly. I went to all the Philadelphia public schools, all the bad public schools. In hindsight, they're much better than a lot of things now. And I worked for the Federal Reserve for 22 years for Philly and for national IT. And in technology, I kind of rose through the ranks. Eventually went back to college. I had like 4 or 5 false starts in college. I'll tell you about my real estate initial false start as well, which was my first deal. So my first deal was when in 2004 was my first venture in real estate. I was still living at my mother's house in Philly. And I said, I got to get out of the house, really. This doesn't make sense. I'm not going to be able to, find a decent girl, living at home. So I had this great idea to buy a duplex from a buddy of mine. And he had this duplex at 13th and Porter. It was in the middle of the block on 13th Street. And he had the property for, from the 70s. It was his family's property. They converted it into a duplex so he could stay home with his family. His mother was sick at the time, so it wasn't so he didn't have to leave. So I knew it wasn't zoned as a duplex, but I didn't know what the implications of that. Any sophisticated investor or not so sophisticated knows the implication of that now. So I bought this property. My idea is going to live in one unit, rent out the other unit. It just needed cosmetics. In hindsight, it probably needed to be gutted. But I was pretty handy. My first foray into construction was buying a Black & Decker handyman book, which I still have. I bought it when I was 14 years old. I tinkered around the house. I did a lot of work. So my nights and weekends were going to be spent renovating this joint. And that's what I did. I mean, I did everything from... I remember spending 2 days to get a broken tile toothbrush holder out of the wall, right? It drove me nuts.
Ceramic.
Yes, it drove me nuts. But that was like
fortified.
Yes. And
that matching soap dish on the other side of the
Exactly. And it was broken and glued back together and drove me nuts. This has got to go. But anyway, I spent a year on that property, but a few months into that project, I come to the property and I find one of those big old orange stickers on the door, zoning violation. And because it was a multifamily, not zoned as a multifamily, I'm like, man, what the heck is this? Did some research. It wasn't going to hire any attorneys. I'm very good at learning. If there was one skill that I've mastered, is how to learn, right? Research and how to learn. So I'm going to figure out how to get through this. Long story short, I went through all the processes I thought that I needed to do to get the zoning changed. The neighbor that was 2 doors away was the secretary of the councilman in the area. No chance of getting that done, right? So I went door to door getting all these signatures. Go up to my zoning hearing and step in front of the judge. He didn't even hear anything. He said denied. Right? As soon as he heard what I had to say, I'm like, what the hell is this? Right? I didn't even get to plead my case. I mean, I was prepared. I had pictures. I had all these signatures. I had all this stuff. Denied. I was, it was crippling, right? I'm like, what am I supposed to do now? Now, granted, some time had gone by where the property value had increased because that was during the market boom. Everybody was buying everything. So I've had this property for a year. Uh, couldn't do anything with it. So I said, the heck with this. I'm done with it. I'm going to sell the property and get the hell out of the city. So I ended up doing that. I bought the property for like 140,000. I sold it for 180,000. Now, in hindsight, I didn't make any money because all the time that I had it, my holding carrying costs and all that. So I moved to Glen Olden. I
Okay.
moved out of the city. I had enough of the city. And then that's where I just stayed. I had a townhouse. I bought it at the peak of the market. The bubble burst. I was underwater my mortgage. Fast forward, and 2012, I met Corinne, my now wife. She started working at the Fed. She's a transplant from Los Angeles, moved to Philly on an opera contract, believe it or not. She was a professional musician, she was a professional singer. So we connected because she got a day job working at the Fed. Her parents had been self-employed law firm and had their own school. And so they taught her that, you need to buy an income property. So she was on the hunt to buy a multifamily property. Ended up connecting her with some people that I knew in real estate. Ended up buying a triplex in Francisville, which, anybody who knows the city knows that all of a sudden these neighborhood names just started popping up. None of this existed when I was a kid. Bought the triplex. I started implementing software to manage it. Meanwhile, I'm still working at the Fed. She's still working at the Fed. Next thing you know, my father-in-law introduces this concept of syndication. I was like, what the hell? Like, what is that? And I said, because I had access to properties, right? I had somebody saying, oh, you're looking for another multifamily? Like, yeah, I'm loving this. Right? I was implementing the software. I had everything automated. We were using Buildium when we first started. Then eventually we switched over to Propertyware. Next thing you know, I'm syndicating deals with friends and family and putting together. I still have the PowerPoint decks that I put together. I'm like, we've got this opportunity to raise money and buy these properties. And we did that, right? I mean, I'm always been, give me a good idea, I'm going to learn just enough to get going. And then knowing that a good portion of the learning experience comes from experience. So did that, man. And man, we rock and rolled in the multifamily space from 2012. We started selling off properties in 2018. 2000, I think, actually the last multifamily property we sold probably a year ago, which was actually the first one we bought. So along the way, we decided that we wanted to get into bigger apartment communities. I'm skipping around a little bit, but we ended up quitting the day job. Corinne first, then I second. This was after we, moved in together, bought a house in Springfield, got married. Then the daughter came around, Stella, my beautiful 6.5-year-old now, and we decided, what are we going to do next? Bigger apartment communities. We were like a small fish in an ocean, and the deals didn't pencil for for my underwriting. And we decided to pivot to self-storage, man.
And what year was that?
Self-storage, our first acquisition was in 2019. So
Okay.
I planned it, had to learn the space, right? So I don't do anything without learning enough about it. So I spent a good year learning. I've read every self-storage book that was ever written, connected with brokers, anybody that I could find in the space. Had to prove my worth a lot. It wasn't as bad as multifamily because self-storage industry is far more friendly than than your big commercial multifamily guys that, that's very cutthroat, different industry. So I was fortunate enough to just find the right people, make the right connections, and yeah, man. And then we just wholesale changed, and my journey and getting out of the property management business and all of that, and just being hyper focused, and that's where we're at, man.
That's right. That's right. Because you had the multifamilies, then you started a management company, and then at the same time, what I like about you, Sergio, is that you're not afraid to do these pivots, and you'll learn, and then you're like, okay, and you stay in touch with it, and you don't create these emotional connections to these buildings, because I'm guilty of that, right? Like I'm like, that's the child, that's the college fund, or that's this, or that's the. I actually
Yeah,
have these little acorns behind me that symbolize buildings being bought and what the year. It's like a collector,
yeah,
and that works for me, and that's fine. And I'll just keep drilling that well a mile deep on that. And so that's the juxtaposition, right? So the first one was you thought you were buying a duplex from your buddy. And yeah, it was set up as a duplex, but it wasn't zoned a duplex, and there wasn't anything that you were going to do to get that changed. But then the market had that's nice. You bought it for 140, you sold it for 180. It's a lot better than buying it for 140 and a year later, dumping it for 100,
yep,
right? So
absolutely.
then you went into the small multifamily, and then I'm assuming for syndications at those levels, you would raise money for down payment, working capital, maybe put on some bank debt, and then that way it's like you're free to go buy more properties because you're not limited by your own capital. And many people that like those types of buildings, you can't really work a full-time job and redevelop, reposition a small apartment building. I personally don't think you can. And I think there's very few property management companies out there
Right,
that you can just hire them to do it. Because if they could do it, then why aren't they doing it for themselves?
right. Well, the big part of it is what I've learned in my journey is scale matters, right? If you're the way that I look at it is, take for example, I've got a missing shingle, right? One of these storms knocked the shingle off of my roof.
Yeah.
It is impossible. I don't mean nearly impossible. It is impossible to find someone that's going to come up and climb that roof to put up a single shingle, right? When you're dealing with smaller properties, the people that work in the smaller spaces, there's limits on their capabilities. Maybe not necessarily potential, but when you get into the bigger space, the pool of complex, of very skilled, highly capable people expand. And so to reposition, I would make an argument to reposition a 100-unit apartment building, you're more likely to have success, providing you do your due diligence and all that. I'm not suggesting anybody go out and do that, than you would a 4 or 5 unit. The caliber of resources that you have at the smaller scale and the bigger scale are different. The contracts that I work to develop self storage from the ground up now is a different contract than I had with Joe Handyman, who I can't get to call me back.
Right.
So scale matters. When we were buying these properties, we partnered with a guy who was a flipper, and we were buying them while he was redeveloping them. So he was a flipper, so his money was being made on the redevelopment. Eventually, we became part of picking the finishes and whatever. But he had a sale before he was even done. It worked for us. There was a chance that we paid maybe a higher penny than we would if this thing went to market. I don't think so, but I had it in hand. I was able to raise money while it was still being done. It gave me confidence. I'll do anything where having the confidence is critical in anything that you do. So I work really hard to build my confidence to be able to execute. And when it comes time to execute, then it happens automatically.
Got it. So you were buying them, maybe not turnkey from a tenant perspective, but you were buying them redeveloped.
Yeah. I mean, they were
Got it.
granite counters, stainless steel, where Where we got worn out and beat up as a management company was when we started taking on Class C, D owners and their properties. Well, the owners maybe weren't Class C, D, but the properties were.
Yep.
Different tenant, different dynamic, different property. These things I remember the first triplex that we bought that was very clean. That was the turnkey. The first one, the 20th Street, wasn't. But when we bought this property, we had the entire building rented out within 1 hour of doing an open house. There wasn't even flooring in the place. We did an open house while they were building it out with renderings of it. The people came in, they saw it, they loved it. It was as clean of a property as can be. And this was probably still the best property that this guy has ever done. I mean, it was tile throughout the entire building. They went out to the car and were filling out the application on their phone. Yep. So I was like, it was fantastic. So my underwriting was the value add that I was bringing was marketing, getting higher rents than even the agents thought that we would get. And that was just because we were bringing a higher quality experience to the tenant that's going to pay a higher dollar than the guy that's putting an ad on Craigslist or whatever the hell they're doing.
So definitely success. You had the money available through a syndication. You had I'll call him a development partner. And now give the audience the juxtaposition of what types of going from 2019 saying, I like this asset class. I'm going to do more research and learning and due diligence about the asset class of self-storage to now 2023, the summer of. What's transpired in that, nearly half decade?
Yeah. So I'm a big believer in growth, and across all aspects of life. We'll talk about health, spirituality, and all that. I'm jack of all trades, arguably master of none, but I'm a master of growth. And like you do anything, you get bored, you need a new challenge and whatever. So for me, the challenge in the multifamily was the next level. But I'm also lazy. And what I mean by lazy is I don't want to do anything that I can't find a way to circumvent or have a shortcut to learn faster. And a good analogy is going from single A, double A, triple A. From our first self-storage deal, I needed to get something that was going to give me experience, wasn't overly risky, something that we can kind of add value to, but maybe I'm going to pay a couple bucks more, but I know the upside is going to be there. So we bought a true value add self-storage facility out in Birmingham, PA. And this really was a guy that just ran this facility with paper and pen. So facility was clean, well maintained. He maintained office hours, the whole bit. The business plan was technology, my wheelhouse, getting rents where they need to be. And even in hindsight, I didn't know what I was doing. I just knew that I needed to implement the technology, automate the tenant experience. So we did that. So our first self-storage deal was all operational management improvements. There were some cosmetics. We did repave the lot and everything. And that was a pretty big deal. I mean, it was a $100,000 improvement we made on the project. Did some LED conversion, but it was mostly cosmetics. The big lift was getting it into modern day age from a technology sense. Subsequent deals, this was at 2019, the inventory of those types of properties at that price point quickly expired. There was a lot of people coming into self-storage. So the next level above simply operational improvements on a self-storage facility is an expansion. So existing facility, you've got extra land, there's positive demand in the market, expand the facility, add more units. That was the next stage. Along the way, it was increasing our pool of investors. We got better at marketing. Uh, you know, we did a lot of different things to improve that part of the platform, but the execution part in our line of business is paramount. That's the core of it. And then that evolution expansion, we've got 7 active expansion projects right now. A bunch of them are, got dirt moving the whole bit. COVID kind of put a damper on a lot of things. It was kind of a mulligan year in life for a lot of people. No different in self storage. But really, where it slowed things down is on the municipality part, the approvals, the permits, and all that other stuff. So now the natural evolution from there is ground up development. So the focus has been on, one is identifying yield, and the yields naturally are more in the development space. Even with the increases in the cost of construction and everything, the yields on storage are still better. We're not building 20-story high rise buildings. There's not fixtures and all the things that come in a lot of other asset classes, where concrete, maybe some steel structure, and steel, that's it. All right, so it's relatively easy. So that's where we're at now. But so the new challenge is, how do I do this at scale? Instead of building one at a time, how do I build 2, 5, 10? My brain is always thinking of operating in multiples, and thinking, instead of thinking linear, I'm thinking exponential growth. Everything, that's kind of the way that I operate my life, is exponential growth and experience and whatever. And like I told you earlier, as long as I'm having fun doing it and learning, I love to learn. So I'm not afraid to learn. I don't do this just for the money. So to me, that's, you got to invest in the right stuff for growth, for learning. So I'm a big believer in investing in myself, investing in our team, investing in our company. All of the profits that we made along the way with all the multifamily went back into the company. We kind of took a couple bucks here and there to live, but we live a very lean lifestyle as a family. I don't ever want to lose sleep over money, and that's a big part of my life.
So what do these deals look like? What's a typical acquisition cost? Are you
Yeah.
looking for them to have more land that then you could develop? You have the existing asset that's maybe paying down the taxes and it keeping the proverbial lights on, and then you're looking for like a value add in your sense is now adding more storage units
Yep.
onto
Yep.
existing infrastructure. And so now you're developing.
Yep. So our the way that we like to see our approach is, where do we fit in the market, and depending on what type of investor, kind of business, it's about product market fit. So our product is self-storage facilities that are a certain size, that have the potential to be a different size, and therefore we can take them from one class to another class. Now you get the added value of changing classes or adding revenue and NOI that comes with all the expansion and all that. But when you change the class of an asset from a mom and pop, $2-3 million acquisition, to now the back end is a $7 and $10 million acquisition, I've repositioned the asset within the asset class, and therefore now my perspective, my exit, my buyer is a different buyer as well. So I'm basically taking a deal and repositioning the asset itself, the physical components of it, expanding the self-storage, taking it from 30,000 net rentable to 60,000. But now I'm also taking the entire positioning of the economic potential of that to another class as well. So my buyer here, so I'm operating as a buyer, smaller facility. Now it does take a certain core capabilities to execute that repositioning. But that's where the challenge is. That's where a lot of people can't play there because they're either don't want to take the risk, don't have the experience, or some combination thereof. So I don't know if that answered the question, but a typical self storage deal size, if it's an existing facility, can be from a typical third, second generation facility will go from like $2 to $3 million to 5 million, and then from there it's what is the cap rate on the exit. The exit, we're looking at 10 to 15 million is where we want to be. So not to mention the other value proposition is the portfolio roll up, which you get with self storage. You don't get that with a lot of asset classes. Having single flag, different company, Hearthfire self storage, we have the critical mass and the economies of scale on the back end, the operational efficiency, the single website look and feel, building the portfolio so every individual store snaps into a brand, and now I'm building out the brand as well. So the beauty of all that is 1+1 is 3, right? That's the model that we're after. And when you're looking at bigger private equity and institutional investors, that's what they're after. So it's repositioning a lot of different pieces to bring it all together. I don't know if that answered your question.
I love it. I love it. And what comes to mind is I interviewed one of the first episodes of Living Well with Rentwell was with Gary Jonas of the Howe Group in Philadelphia, right? Great guy, just all around great guy. And he says, Rob, people come to me and they want to be mentored on real estate. And he says, I can't help you if you have a 5-year plan, but I can help you if you have a 15-year plan. Like that's the horizon that he wants people to be thinking about this. And if somebody would have come to you and said to you back in 2004 at we were talking about stress as we were, preparing for this and just catching up. And it was like, stress isn't really real. Stress is just like a reaction to how we think life should be versus how it's showing up. And in the middle is like this stress. And I bet if somebody would have said like, Sergio, and you just got like the gavel rung if they even had one. It was like, get out of our whatever. You're not getting your duplex. And be like, what?
All right.
And be like, but don't worry, dude. Like 20 years later, you're going to be, are you in a multi-state operation? I'm assuming you're in your 5 states, and you're going to be redeveloping self-storage. It's like you didn't give up. No. And you kept that proverbial failing forward.
Yeah.
And then figuring out. So now, what does it look like? I think you've given everybody a nice sense of you continued to pivot. You found an asset class that you like. You found where you can provide value to these smaller mom and pop operations to get them operating not only more efficiently on what you're buying, but then also larger, and then larger in that world equals a higher level of we got a dog barking in the background. Apologies for that. Equals a different buyer on the outset. Right. And I'm not sure if you're planning to just continue. Are you going to sell these? You don't have to, because you have your own holding company that can operate these where it makes sense. But if I know you, you're not opposed to, hey, if it makes sense, sell it. And if it makes sense to keep it, that's a healthy way. It's a healthy perspective.
Absolutely. So I look at it as celebrating your wins. You could, and that means a lot of things. That means a lot to me in different contexts of life. So celebrating my wins used to be like, hey, we closed on a property, we're going to go to a nice dinner or whatever. We close now on a property and it's like, all right, cool, it got done. It's not the same. But when we're talking about celebrating wins. It's about being able to recognize as an opportunity to lock in gains and profits.
Hmm.
You mentioned earlier about being a collector. I refer to a lot of people that just buy and say, I'm never going to sell. I'm never going to sell. As you're a collector, right? You're not an investor. You're a collector. So my insurance broker, my life insurance broker, at one point, we were talking about crypto, and I had built up this sizable crypto portfolio. And I said, man, it's been going up and it's already worth whatever percentage higher than what I paid. Stupid numbers. And he said, well, you got to lock in gains. And I was like, what do you mean by that? He said, if you sell some, you still maintain what you really put in, but you can't take that away. And a bell went off, right?
Mm.
And I look at that now is once you lock in a gain, you can't take that away. You can't lose that money. So now you've got your original investment, you've got the gains here. Now you could put that the subsequent investment to work. But if you've got an opportunity to sell and trade up, you got to take that. The way that I've always operated it, my company and my business, is how do I lock in the gains, and then how do I reinvest that money? And reinvest to me means it's different things. I sold the property. Yeah, somebody said, well, you could 1031 exchange. I don't want to pay taxes or whatever. Yeah, I've done that. And in some cases, it forces you to buy another property that maybe you wouldn't buy if you didn't have the 1031 exchange. So you're trying to save money on taxes and making a stupid decision on the other end. Anyway, but if I outright sell that property, what I can do with those gains is much different. So sell a property, reinvest in me, i.e., coaching that maybe costs $50,000 a year. I didn't buy a property, but I bought knowledge, experience, and education working with somebody that can take me to another level. So I reinvested that money, not in a cash flowing asset, but I reinvested it in me, reinvested in my company, went out and hired a rock star COO. So I'm reinvesting in life, but along the way, lock in gains as often as you possibly can. Celebrate those wins and apply that theory across every aspect of my life.
Perfect transition, man. So what does it look like for you at your health, your spirituality, your practices? How do you take care of you? You've done a lot of navigating
Yeah.
in the time I've known you, and it seems like you continue to do so.
Yeah. Yeah.
What does that look like for you?
So my philosophy when it comes to life in general is I want to squeeze everything I can out of it. I tell people all the time, you only get one shot at this. You get one shot at life. There was a time where 3-4 times a week, I'd be in a bar after work, just, using that psychological beer boost, where you got all the dopamine running, you think you're smart, you think you're doing all this stuff, but in reality, you're actually drunk, literally and figuratively. And that's how you're navigating. That's how you're navigating life. As I've grown, number one, it's important. The number one person that I want to be mindful of and take care of is me. And the reason is I'm useless if I'm not the best version of myself. I can pretend like I'm happy. I can do all these things. I've got a wife, I've got a daughter, and I've got my own consciousness that I've got to look after. So for me now, I've done everything from miracle morning and all this other stuff. And there's a lot of great practices, but you got to realize that there's also a lot of individuals that write a book and have a program around what worked for them in one aspect of life, right? I'll happily take business advice or technology advice from, say, Bill Gates, but I'm not going to take relationship advice from Bill Gates, right? So I now look at model different parts of my life around experiences and bodies of work around that other people have proven. Just because you wrote a book doesn't mean that you know everything about something. But if you wrote a book about a journey, and the journey shares a lot of wisdom on how to learn, how to course correct, and all of that, take those pieces. Um, when it comes to my health, I've studied everybody from Schwarzenegger to Bruce Lee, people that had a body of work in a certain space and prove that they're at an elite level. That's easier to do with people that have the tangible attributes that you could see: net worth, physical appearance, that kind of stuff. The spiritual stuff, different level, right? The spiritual part is really about studying the work of who are the enlightened teachers to learn from: Jesus Christ, Buddha, Gandhi, whatever, right? There's a whole body. So I'm a big believer in studying the body of work and studying the individual journeys of these people, and then learning what I can, and then trial and error. My journey has taken me to being having adult ADD, and it was a recognition about 2 years ago that I'm like, maybe, like, why is it that if I have a drink, I want to have four or five, right? And my father had a lot of mental health issues and things like that, so I took the psychological approach of had a bad upbringing and all that other stuff. I've discovered meditation when I had an anxiety disorder in my mid 20s, so meditation became a big part of it. One of my spiritual guides, Osho, was one of the initial people that I studied from, that I studied the law of attraction to understand energy work and all that. So I became a little bit more aware. So I look at that work, the spiritual work is, to me, is a category of teaching yourself awareness and consciousness, and being aware of myself, what I'm doing, how I'm behaving, how am I speaking, how am I thinking, how am I sleeping, all of that. Having the awareness gives me the inputs that I need to course correct. A pivotal book for me was Faster Than Normal, which kind of applied, which helped me understand that the way that I was behaving and functioning was at a very high intellectual level, very analytical and all that, but also very spastic. I'm all over the place. So I was like, all right, if that is true, what do I got to do to fix it? What are some of the principles? Again, a lot of trial and error. So now for me, it's exercise, meditation, prayer, eating healthy, not 100% of the time. You don't have to do anything 100% of the time. There's folks that come out and say, oh, every day I do my journal, I do this, I do my miracle. You don't do it every single day. And if you do, you're probably more robotic than you are actual enlightened or anything else. But we're all fallible. So for me, right now is, how do I continue to grow and evolve? I still got plenty of work to do. I'm excited about it because I'm taking it. There's not an end goal. It's a journey. But how do I elevate my health? I don't drink. Um, I've cut back a lot on caffeine and coffee. It was like 6 weeks. I do 36-hour fast once a week. Don't eat from Sunday afternoon dinner, and my next meal is on Tuesday. What I want to do, my focus is add stressors to my body, to my mind, and learn how to respond to those stressors. I'm not an adrenaline junkie. You're not going to find me, flying down a mountain on a mountain bike, avoiding trees. I'm not an adrenaline person. It's really about, how do I continue to increase my capacity for day-to-day stress, not eliminate stress, not reduce it. How do I get more? All right. How do I elevate my company, the people around me, and be able to do it gracefully? That's cool stuff.
Mm. Calm in the midst of the mightiest storm, man.
Yeah,
I
man.
think that by you recognizing that one drink could lead to more, and you just kind of like, wait, what am I doing here? Okay, what am I doing here? I think that's a start for a lot of people where it's like I
Recognition.
recognize that in myself. A
Yeah.
little over a half a decade ago, I was like, man. For me, it was at another level where I didn't want to do it, and I was still
Right.
doing it. And I was like, shit, now I got a problem.
Right.
Yeah, who's running the show here?
Exactly.
And that's when it's like, okay, and then what are these thoughts? And we were talking about Michael Singer before, and Osho's another one. Not as much our time. He
Yeah.
was a little bit more controversial.
Yep.
Um, so that I love it, man. I love what you're about. I think I really appreciate you coming on the show today and sharing your story with the listeners. I mean, this is what it's about. From 2004 buying a duplex that wasn't actually a duplex to then
Yeah.
redeveloping multifamily and learning syndications to then doing maybe some smaller syndications
Yeah.
on the self storage side to now you're working with. We didn't get there, but maybe for another episode in the future of like the family offices and bigger checks and building at that corporate C suite. Um, and you're a husband and a father, and most importantly, you said, "Man, I got to take care of me. Don't take care of me. You can't take care of anybody else."
That's been the
So,
journey that's been like most, I don't know if I would call it eye opening. That lately my focus is how do I love myself a little bit more? It's a crazy idea to think about that because you read that and you're like, man, is that like creating some sort of ego? Like, yeah, I love myself. But in reality, it's not. It's giving myself permission to feel an emotion, to understand where is it coming from, change the conversations that I have with myself, and going back and now I'm revisiting my childhood trauma, and I'm
mm,
going into those different situations and I'm saying, how do I change the perspective of me being in that situation to understand the environment that I was in and what circumstances and where is the love in that situation? Because if I can latch onto that, it's a better frequency. It's a better way to look at it and forgive that I didn't have all that. But at the
mm,
same time, now, I've got an opportunity to reflect, understand, and contribute however I can to elevate everybody else. I mean, that's our obligation, right? Learn, grow, share.
mhm.
That's kind of the path. I mean, I'm excited to see where I'm 47 now. I'm excited to see where I'm going to be at 67 because if I keep on this path, I'm like, man, if I learn at the same rate, you know, that's man, I can't imagine life being that much more magical
Yeah,
than the moments that I find now. So
I love it, man.
good
I'll end.
stuff.
There's the episode right before this is Tim Davis, who's my coach down at the Temple of the Universe, and him and another. He's actually a GoBundance member, Mike Duffy, put
No.
together a course that's going on right now, Sundays at 7 p.m. Not too late to join. It's on peace and serenity. Peace and serenity. There's thousands of Google entries for serenity. I'm sorry, it's serenity and achievement. And then there's tens of millions for achievement. And there's like zero for serenity and achievement. Here's what Michael Duffy found after interviewing 200 individuals. There's like six core, like you're not the voice in your head is a big part of having that level of serenity.
Mhm.
Singer talks about that all the time. And there's some others. But for the high net worth individuals, the
Mhm.
number one contributing factor that he determined through his research was the ability to overcome trauma, both the big T's that some of us have had in our lives and also the little traumas
Yep.
that because it becomes our own spectrum,
Yep.
right? And I think what is unique about individuals like ourselves is there was probably some trauma there that led us to get started in this. I know I can say right? We're nodding our head. Like, my mom got sick with cancer. I saw my dad stressed out about money. He was self-employed. My brain says, don't be self-employed. Don't have a job and don't be self-employed. I read Rich Dad Poor Dad, said, build a company.
Right.
Okay. But that was fear-based.
Yeah.
And then you make shitty decisions from fear. It's a lot of energy, but it's not loving energy like you're talking about now.
Absolutely.
So I had to make that connection there, because then it's like that proverbial, what got us here won't get us there.
Yeah.
And we're not the best CEOs when we're driven by fear versus
No.
driven by love. And you can't love anybody if you're really not in loving yourself. So maybe we can have you back on, Sergio, as you continue that journey through this. Are there any books that you like to close out with? You gave one to me when we were doing this. The book was called, let me find it here.
Letting go.
Letting go. Oh, it's on the first note. Got it. Letting go.
So, what I would say is, that question comes up a lot, and I don't have that one, because there was a pivotal book in different parts of my life, and now, as I was talking about, is I like to study the body of the work of individuals, kind of like a Michael Singer. It wouldn't be one of his books; it would be the books that support his journey, right? Jesus Christ, obviously the Bible. I mean, that's an educational resource. That's teaching. Pick whatever part of your life you want to grow, how you want to grow. Find someone that you can model or emulate. You're not going to know everything there isn't to know about them, but study their body of work.
Yeah.
And that's going to be autobiographies, biographies, whatever technical books. That's my answer to that question. It's
That's
not
a beautiful pearl.
that's it.
And you can't do that. At least I can't do that with 20 different bodies of works in a year or something like that. I'm going to read a book a week. How are you going to implement any of this stuff? What habits are you actually going to end up change? What level of consciousness will you get to? Study bodies of works.
Yeah.
We'll leave it on that note, my friend. How about your website for those to get a hold of you and want to learn more about what you're up to at Hearthfire?
hfirecapital.com. Sergio Altomare. You can find me on LinkedIn. Connect. Sergio at Hfire Holdings is my direct email address. I answer all my emails, so anybody reaches out, love to connect, man. Yeah, that's it.
All right, my friend.
Cool.
So great to have you on today. Thanks so much for sharing and enjoy the journey.
Thanks, brother. You too, man.
Absolutely.
Thank you for listening to Living Well with Rentwell. We hope you loved that episode.
Please be sure to head over to our website at rentwell.com/vision. We're giving away our free program called Vision Through Purposeful Action. If you're a busy person, if you struggle with finding the time and priorities, or if you're experiencing procrastination and overwhelm, this free course will help you with that.
We wish you a blessed day. Thank you for tuning in, and check in later.